Thanks a lot for joining, everyone. We wanted to discuss some of the challenges in this transition from hydrocarbons to electrons. We've been talking quite a lot about, over the last day of the conference, about how the battery metals complex is really the demand driver behind a lot of this commodities bull run, the decarbonisation theme as well. So I guess it'd be good to do sort of quick introductions about how you come into this field, and then also your view on where's the value creation opportunities and the supply tightness within the battery materials complex. And Aline, could I start with you, and then we'll work through.
Of course. So obviously we are undergoing an enormous effort in terms of bringing the supply chain online. What we see is that out of the component of the supply chain, the battery manufacturing is growing as needed. Obviously, the upstream side of it, as we know, is being underinvested for quite a time. And what is getting interesting now, and taking into consideration other supply chain issues that we're seeing in the world, and everybody having troubles, getting from computers to cars, taking longer than necessary, is waking up people to the fact that you need to invest across the chain. You cannot just pick a particular sector that is close to the production and not looking to the supply chain as a whole. So now we are awakening to the fact that we need to bring these metals and mines online. There is a lot of mining capacity that needs to come up to meet these challenges of decarbonization that we're setting up for ourselves in last week's meetings. So it's becoming quite interesting for our sector, for sure.
Yeah, certainly. And is your view from Parla that we're going to get there, we're going to reach these government targets, we're going to reach the EV penetration rates that have been set, we're going to produce enough of the materials to meet these quotas?
Yes, in general, yes. Our view is that we're going to get there. There's going to be bump on the roads for sure. That we're going to get there from a combination of things. We're going to get there from, obviously, the mining supply is going to be key, but we're going to get there from substitution of other materials. Quite a few of these metals will be substituted in their, traditional uses, and that we're going to get there from increase of scrap. The problem is, because we underinvested for so long, we're going to get there at very high cost, unfortunately, for world society. We're going to see these prices coming up quite high to finally incentivize these materials to come online. It's our prediction at Paula, but eventually I think we'll meet these challenges. It's difficult now because a lot of mines have been underinvested, but let's remind that this sector has built a China in the past 20 years. It was an equally large effort to bring so many materials to support that kind of growth. This is going to be a different one. It's going to be a decarbonization-led growth, and I believe we can meet it.
Yeah, interesting. Charles, I'll bring you in, and maybe a little bit of background, actually, as you're the corporate on the panel, and you've got a great asset in the US, and looking to sort of develop exactly this, critical mineral supply chains, more localized.
Yep. So we have 3 development assets in the US, in Arizona and Nevada. We have pegmatite assets, brine assets, and clay assets. And for us, from the lithium point of view, most lithium, or all lithium, is mined in sort of South America or Australia, and then sent supply chains via China or Europe to get to the US. And for us, it's about the development of the supply chains within the US and developing that processing capabilities. For example, with spodumene conversion facilities for hydroxide conversion facilities for our spodumene concentrate from a potential pegmatite. And there's lots of developing projects emerging in the US on the sedimentary side and the brine side, which is an easier route to get to sort of the carbonate. But for us, it's that development of the midstream processing capabilities for the USN market, which is something which we're very keen to develop. It's what we are sort of speaking to many end users about. So that's the key thing for us, which is helping for the US development of a domestic supply chain from a lithium standpoint.
And how is the US's midstream processing? It's severely lacking at this stage on a global scale.
Well, yeah, you're right. It is developing, but it's something where there hasn't been a requirement or need at the moment, I suppose, because most of it has been from South America, from Australia, and then sent to China. And there's been such development in the last few years regarding the carbon content of the metals in batteries. And that is something where if you're developing a electric vehicle supply chain within the US, it's going to be as green as it can be. You need to have projects within the US who are mined in the US and processed in the US, and you're cutting out on that unnecessary travel. And also, the processing can be somewhat opaque within China of what's the energy source for that. So if you're developing processing capabilities within the US or the green power sources, again, that's reducing that carbon content and making that supply chain caught up, because I think there are conversion facilities popping up for pegmatites within the US. I know Tesla are looking at a spodumene conversion facility within Texas. So for us, that would be ideal because our assets in Arizona. So these things are happening, but it takes time to put them in place.
Yep. Okay, we'll come on to some of those points in a bit. Fredrik, you introduce yourself and then also give us your view of how do Clarksons see this supply-demand challenge of the materials that are going to enable these supply chains to develop.
Yes, I am Fredrik from the research side at Clarksons. So I do believe we have some, call it, sell-side insights to give, particularly since we're in Europe now, and whenever you open a newspaper, you're going to read headlines that talks about energy transition, ESG, and everything. And I wanted to kind of add to that when you're selling a story here about value creation, it's easy to sell a story where you're pushing a product if it's the battery or the battery manufacturer. It's easy to understand for people, and it's closer to that green transition. It's easier to comprehend. But as I'm sure many of you will agree with, it's not something that can happen without the upstream part being in place. And I think we can have a lengthy discussion about ESG in upstream, and it's clear that needs to be in place as well. But we could almost go as far and say that without proper upstream investments, without proper capital being allocated to good projects, if that's domestically or if it's elsewhere, your battery manufacturing plants will be worth $0. If you can't produce the product, it's not going to be worth anything. So I think that there's a discrepancy here between where we've put, or where the world has put its money now. It's put it into the easy story. Now we have to do the hard part. We need to up investments. We need to get the raw material properly in place. And when it comes to more directly to your question about value creation here, I think it's all going to be about scarcity. If you are the one that keeps or produces the raw material, which you have the least of, well, then you have the good cards. Then that's where you'll find your value. So if you can, get the story out, properly educate investors that, as it was said on a panel here yesterday, 40% of a windmill is met coal. Like you can't get around that. So if you get the proper story out, I think the catch-up effect, as you alluded to, will be possible, and there will be value to be found there for sure.
Excellent. Just on some of your points on upstream financing, is it better though now than we were in a position 2 years ago, sort of when we were doing this event, for instance? Are you seeing more capital flowing into the projects, or when you're speaking with investors, they're more interested in a mining project than just holding an EV company, for instance?
Yes, absolutely. I would say it's something that's you're getting started on that educational process with investors. The more time they spend on batteries self-producing, then they also see that the rest of the chain is needed. And at Clarksons we've done projects for numerous different type of metals and minerals, and I think that will continue. And if you have domestic projects like yourself, it's going to be even easier to get those through for sure.
Yeah, excellent. Rebecca, please introduce yourself, and you cover the complex of battery metals at Crew. But yeah, what's your take, this top line view on how the supply chain challenges are evolving?
Yeah, thank you. So yeah, I do work for CRU. I run the consulting division and previously was responsible for critical minerals. I think Aline made a very good point about some assets coming on that are perhaps not at the bottom of the cost curve, pushing up prices. We see the global geopolitical tensions as well as policy really driving decision-making at the moment, and it moves away from that pure rational, only finance things in the bottom quartile to people making other decisions because they want assets in particular locations. So we're doing quite a lot of work on copper financing, lithium, rare earths, also nickel, quite a lot of conversations around nickel. I think there's a couple of important points though. Obviously, you can make raw materials, but you've got to be able to sell them to someone, so the benefit does come only with the full value chains. And the comprehension in the market at the moment about what that means in terms of dollars invested, I think isn't fully there. I think also the fact that if we look historically over commodity prices, people don't make extraordinary profits for extended periods of time, even in markets that really have had a difficult transition in terms of their end uses. I mean, as lithium came in or as cobalt, the market does tend to spike and then revert to a more norm over time. So what we need to be looking for here is how quickly that return will happen, how quickly other solutions are found, because it's unlikely, as fund investors, we just know over time you don't make an extraordinary profit, the market clears. And I think the final point is the carbon emissions. So this is a final thing that's overlaid. And the first thing we need is transparency. At the moment, when we're building assets, I think it's not the first thing people are looking at, the carbon emissions, but it will quite quickly be an important aspect, particularly with the cost of finance and trying to attract the right finance, being able to show your carbon from an independent viewpoint and your carbon all the way through to the consumer. So that's another thing that's taking quite a lot of our time because it's not obvious how to do that. How do you measure? Where do you measure? What do you call it? Is not actually fully set up in the market and fully understood. So that's really engaging a lot of my team at the moment as we look at carbon border tariffs, carbon monitoring, who owns the carbon credits. Very challenging work at the moment.
Yeah, so much to cover. It's really expanding. Erez, could I bring you in? Could you introduce Traxys Battery Holdings as well, because we're familiar with Traxys?
Yes, Traxys is a global physical commodities trader, one of the legacy firms. Our controlling shareholders are the Carlyle Group and the Lewis Bacon Family Office. But we also invest. We actually did a bit of track record work recently to gauge ourselves, and we're almost the size, I guess, of a Fund 2 or Fund 3 of some of the private equities. In recent years, we've been focusing on investing in the battery materials narrative and supply chain. We have a partnership with Panellists, where we invested in Nuvamon Graphite, Nemaska Lithium, and Talon Minerals. And on our own, we also invested in Li-Cycle and a few other recent companies that launched. Where we see, the opportunity to create value and to, I guess, contribute to this global Kaizen effort, because it's going to be a lot of things moving from all directions. There's no single component that will eventually get us to a decarbonized world in 2050, et cetera. We think that the midstream conversion capacity of battery materials as an enabler and something that unlocks is a great opportunity, because you would not build a cathode plant or an anode plant unless you knew that you can secure the feed. So there's a chain reaction here. And what we're pretty good, I think, at doing, both in terms of managing supply chains and building them, and our partners at Panellists are also very good at building the upstream, is creating these if you will, regional hubs, which will enable other upstream to join in and will motivate the next links in the chain to actually locate their facilities in that area. And we're focused regionally now mainly on what we call the Pan-Atlantic supply chain, where about 50-60% are the customers live. The distances are manageable. Politics, not necessarily in a good way, are in our favor because of all the tensions that we spoke of when we were chatting outside. So that's the narrative from our perspective. A good opportunity to create value and to basically stimulate the supply side and act as enablers is in that spot.
Yep, excellent. All right, touched on some great stuff. I'll try and pick apart different bits. And if anyone has any questions along the way, just raise your hand and bring around a microphone as well. I wanted to sort of look at the idea of where the battery metals complex might be going, particularly in the wake of sort of higher prices. And some of you mentioned about substitution, and I'm thinking, copper, aluminium, or what. So, how is the battery metal complex evolving in favour of what people are using in EVs? We've seen more LFP going ahead now, and is substitution creeping in based on higher price predictions for longer? Aline, do you want to give some comments on that?
Sure. Would you?
I was just going to ask about restocking.
Okay, let's do this, and I'll come on to you next. Sorry, I didn't see your hand.
Okay, so I think what we are waking up to the fact, and has been the view of Paula, is that as you substitute a whole chain of vehicles, you're not just substituting one single electrical car. It feels like, 3 years ago we talked about the electrical cars, and in reality, just like ICE cars, there will be high-end cars, there will be low-end cars, there will be entry-level cars, and everything in between. So there'll be a range of batteries with a range of costs and a range of needs. So there will be cars that will be LFP-based, so about 30%. It makes a lot of sense to have LFP batteries. And depending on how much you need for distance, not everyone is going to need a 500 miles distance car to go around every day. A lot of these cars will be city-based. They'll be very comfortable having 100, 200 miles of availability in between charges. So that will create a range, as we've seen, of electric vehicles that will go through different NCM batteries, LFP, and NCA. So at the end, what it's going to be a mix. There will be more acceptance, in my opinion, for lower ranges. As we started the game was all about focus on how far you can go. This car can go 600 kilometers. That car can go 550. As the battery becomes a more expensive portion of the vehicle and it becomes more expensive, people will consider, why do I need 600? The one time I'll go do such long trip, I can stop at a gas station and charge my car, particularly when the charging time reduces, which is going to be another game changer as we see some supercharging and the charging times of these cars coming down. So we came from a world where we had about 20 electrical vehicles on board, and now we are right plus 100. Every single car manufacturer has a different range. So on the mix, if we were to get technical, we believe LFP will get a 30% market share, and within that, NCMs will be the leading of the higher distance, higher end cars, and that within that the higher nickel chemistry will likely win. And that's the path that we can see for the next, very easily for the next 5 to 10 years, because those cars have been approved. Once you have the model approved, it's not as easy to change the manufacturing of the car. So we have a really high confidence estimate for the next 5 to 10 years. And after that, you have to start thinking about solid state batteries. But at least you have like that horizon that is quite well defined. The cars are defined, which models are coming in the next 3-4 years, which models have been just approved. It's unlikely to be interest for the OEMs to change them right after they have been approved. So in that, there's some confidence now, which is a much nicer place to be than 3 years ago when there was more of a uncertainty where we'll go. I think now the projections are easy to make.
Okay, and just to add on that, how do you see it regionally different? Do you see a certain EV model in China, not just because of their own controls on the economy, but or the price of the vehicles that they're producing, but Europeans can be buying European-made EVs, and North Americans going to be buying Teslas and North American-made EVs, etc. Or do you see it a lot more? Yes,
I think there will be a little bit of regional chain particularities. I think in China they're already proven that a very low-cost vehicle is quite popular. It's the most popular EV that we've seen. Perhaps it comes to Europe or something, the kind of similarity, but Europe, as it has with ICE cards, would be different. So, for example, it already is, right? Like here, Volvo Electric is a very popular car, and the electric vehicle most popular in the US would be more of a Tesla. So you already have you have regional tastes. I think that makes sense. Yeah.
Yep. Anyone else? Yeah, Erez, you want to
Yeah,
talk on
I
that?
just want to add to that narrative that transportation as a service, or everything as a service, will also be an enabler that will unlock some value in this respect, and will reduce the range anxiety, definitely, and we'll have different models in terms of ownership. If a car was an airline, it would be bankrupt, right? An airplane has to be in the air 22 hours out of 24, and 2 hours of maintenance max, I think, over its life. With a car, it's the total opposite. So it's a waste of resources, and I think these things have been well spoken for. And the telecom, revolution actually enables that. And there's a lot of efforts going on now on the software side, fleet management and battery management, and all of that will also act as something that will enable this transition. And we're talking about EVs, but we have ESS, we have energy storage as an enabler of transition to renewable energy. Maybe even skipping nuclear, which we all thought would be the base load for the 21st century, and the variables will sit on top, but maybe they will be oscillating above batteries. So that's another element that creates another level of pressure from the demand side. So basically, squeezing everything and making it more tight and more efficient is critical.
Sorry, Charles, you had your hand first, and then you wanted to comment.
Yeah, I fully agree, and also want to go back to some of your points about energy density. For the lithium market, obviously lithium is one of those universal components of most battery chemistries, and with the sort of movement forwards of more of a sort of understanding of how lithium prices work, because we've had such a sort of jump up and down in lithium prices over the last 4 years, and there's been a massive disparity between hydroxide and carbonate, with hydroxide at a premium. Because I think the understanding of the battery chemistries has developed, because, as you said, different densities of battery chemistries, the high nickel going towards hydroxide. And I think people are understanding now that you don't just need one type of battery chemistry, you need a range. And it's not necessarily going to be one type overruling everyone else. It's going to be a mixture. As you said, you need the majority of, probably most batteries are going to be sort of more reliable, lower energy density, and you're going to still have that percentage of higher density with the hydroxide. But for us as a sort of lithium producer, it's trying to understand what the OEMs want, whether it's carbonate or hydroxide. And I think there seems to be a leaning tendency towards carbonate now, just because of the shelf stability of it compared to hydroxide. It's sort of making the premium for hydroxide eroding. I think now we're at sort of parity between carbonate and hydroxide, because the markets are understanding that. And obviously we've got a huge spike in lithium at the moment, but that will erode over the time. But the long-term prices are very positive. I think it's sort of $12,000 to $14,000 a tonne for both, which again is going to help bring on majority of projects, because most are well below that point. So for us, it's very, very long-term positive.
Yep.
For the development of, as you said, the mining projects in country to help the supply chain.
I think another important point, or when we're thinking about substitution and how batteries are going to look like in the future, I agree with most of you here that there's a difference between what's nice and what's needed for different applications. But I think it's also important when you think about innovation and ingenuity at this point, when you look at the price for capacity over the last few years, it has fallen drastically. So it means that at this moment, the kind of the raw material cost for a battery is much on a relative basis larger than what it was before. So I also think that due to the learning curve that we've been through, we've also come to a point where looking at different chemistries, potentially something that we don't know about at this point. I'm an economist, not an engineer or a chemist, but we've come to a point where I think you'll be even more incentivized to look at new opportunities, just because the benefits of scale and much of that has been taken out in the price already. So now you have to look elsewhere, and that might be a hard job. And I'm sure there are very many smart people out there that are working on it as we speak. But I also think that's an important part of how this world is going to look in the future.
Rebecca, please, opine on those points.
I guess mine just follows on from that. We see the automotive guys actually contracting for energy density or for the energy contained. So they're passing the risk down to the cell and the chemistry guys. So I think the ultimate determination of what the metals are that are consumed is probably not with the automotive guy. They're definitely going to hand that risk back. They know they're not the chemists. So we're seeing the Koreans and the Japanese coming in, particularly into Europe, and owning that decision point and delivering a storage capacity. In terms of your underlying question of copper and lithium, they're the two I think are the least substitutable, to be honest, because LFP still has the L in it. Solid state probably is lithium. It's the lightest element. If you look at the periodic table, it's just fundamentally better in terms of weight to storage capacity than almost anything else you can think of. Obviously, the one big area might be hydrogen fuel cells. I'm not sure how much we're covering here, but if you start to look at the platinum loading they're achieving there, the cost of that has come down dramatically. If you can start to charge those with hydrogen in a realistic way, and the tanks in the cars have actually been the most difficult thing to build, most costly. You can start to get parity there, and that's not just a substitution in the commodities in the battery, but is a technological alternative. And also when you move from cars up into the vans, the Amazon trucks, we're starting to see now that combination of a battery and a cell, a fuel cell or a hydrogen cell, because people are matching, exactly as Aline said, you're matching your needs to what you're spending very carefully to make sure that you get your range, you get your capital utilisation for whatever the particular asset is. So there's a whole world of solutions, but I still have to come back to the fact you don't make extraordinary profit, so someone will find a way.
Yeah, interesting. Of course, so the hydrogen element more for trucks and larger vehicles where it's more applicable than the EVs perhaps for
The Japanese are looking at it in cars. It's also very relevant in particular environments like forklift trucks. And it's also where you've spent capital and you need to keep it moving. So Amazon in-town delivery trucks, you can't afford to park them up and charge them. So until you've got the charging time down, it's potentially another solution that's needed. Yeah.
Okay. I wanted to ask about recycling that's been mentioned on the panel. Someone mentioned it this morning. And actually one of the issues an analyst mentioned this morning is sort of like quantifying scrap within the global supply and how difficult that is, the effectiveness of recycling. It's obviously going to get a lot more attention, perhaps investment, because of the supply shortages. What's the panel's view on the recycling market developing?
I think this is a very usable, fixable problem. It's price. It's very easy. As price of these metals go up, recycling rate naturally goes up. You start recovering from, components that have a lower density of those metals. You increase your base of recovery, and those metals comes back. I'm very little concerned that a battery in a car will be recycled, and that will be it's extremely profitable to do that. Will be more who recycles, who owns it, what the supply chain looks like, but would it be recyclable? There is no doubt about it. Like, there is no fear. It's a very profitable portion of the car to recycle. Just remember at the last copper boom, maybe it's my background being Brazilian, copper cables disappeared out of the streets, right? Like, you start seeing even unusual recycle rates coming in at certain levels of prices. And I think that's what we're going to see. We're going to see a huge boom of recycle. Some is going to be little individual recycle. Some is going to be, very structured, but for sure, this will be recovered. Yep. That would be my...
Fredrik, you put your hand up, but happy to go across the panel with this. Yeah.
I'll jump in. Fully agree. I think recycling is something where it's obviously a key component of developing a green supply chain. But it goes back to the points of, you're not going to get the end product unless you have the mines, and you're not going to be able to develop these supply chains without sufficient capacity, amounts of batteries, which takes time to develop because of the end of usage. So again, that's something which will take a bit of time to develop post the actual batteries developing themselves and the EV penetration increasing.
Yeah, I also would like to add that I think, recycling historically might have been viewed as a type of chore. And, that mindset has changed over time. And at least in Norway, we're getting more and more different boxes with different colored plastic bags that are sorted and recycled. And it's very good. But I also think for batteries and anything that has, much more costly process to extract than making a plastic bag itself, you will end up viewing that as a commodity in the end. And I think it was touched upon actually in one of the earlier panels as well, that the business you can build around recycling, it has two things that you could highlight. It can help you bring supply out faster instead of going through lengthy mining permits and just extraction processes in general. And it's also going to help, or at least I think even out these extreme price reactions that we're going to see now. And in some extent, although it's a bit of a side of your question here, you can argue that the more volatility that we see in whatever market, that will scare some investors off. They want visibility. And again, that might have been a contributing factor to underinvestment in general, that you have these large spikes. But if you have then a secondary source of supply, it's easier to even out those gaps much quicker than it is at this point, I think.
Yep. Becca, do you have projections on global recycling and scrap?
Yeah, I mean, obviously it's mandated in Europe to recycle the batteries, which is a nice thing. I think we need to look back to the lead industry and look at how that evolved. Obviously, the policy didn't lead in that case, but we have got to 80+% of the lead market being secondary now. Where the material is, it sits in the car. I think it's even more interesting now because as we look at transport as a service, coming back to the point there, who's going to own the car? And if the car company retains ownership of all the materials and they lend it to you, even be that on a leasing agreement to you alone or as a service across multiple people, the Uber model, they still own that material and they can call it back. They're huge advantages. They know that it hasn't got artisanal cobalt in it because they bought it originally. They know what the carbon content is. They bought it originally. They know exactly what the chemistry mix is. They bought it originally. They know how to take it apart because they put it together. And you start to get a much more efficient recycling chain that occurs that way. We have an inquiries on black mass. So black mass is the mushed up secondary cathode material. And we're beginning to get people asking us a bit about the future prices for that. Actually modelling its availability is incredibly difficult because the chemistries historically have been very changing. And also we don't know what's gone into storage and how long the batteries are lasting. So there's quite a lot of data needed to model it really well. It's very, very hard at the moment, I'm afraid.
Yeah. Erez, yeah.
Yeah, just to add to that, a few interesting, I think, observations are that unlike previous value chains in the battery market now, the recycling is developing hand in hand with the primary, both in terms of the economics and in terms of the technology. So it's not an afterthought or a rehabilitation project. It's actually something that's trying to create as much circularity in the first instance. And that, I think, is an important effort. Again, when we actually look at the availability of batteries, a lot of it is still aggregated electronic junk. Part of it is manufacturing scrap, just because the cell manufacturers are still not as good in terms of their rates as some of the more mature industries. They just have more rejects and scrap that need to go back in again. So from that perspective, they'll be making a lot more cells, but they'll probably also get better at doing them. So there's two vectors there in that part of the equation. We just see it again as another way of bridging this humongous supply-demand gap that's been the narrative for everything we've been doing in the past few years. Through recycling. And it's important to know that not all recycled material can just turn around and go back into a battery. But the fact that these units are there and are usable for something else many times offsets the pressure on some of these materials, or just goes into anything from, we've been metallurgical graphite and and aggregates can come out at the end of the day of what comes out of a battery. So from that perspective, everything is important, and because of the very long time and capital intensity required with bringing on more primary production, this is very important. And another angle that we think is the sort of let's call it the rehabilitation projects, where you have dumps, where you have tailing ponds. Because of inefficiencies or lack of care in the past, there's still a lot of valuable materials in them. And projects that combine the rehabilitation and the economic extraction, you don't need to mine them. Most of them are homogeneous, so it's relatively easy to actually identify what you have there. And working on these type of projects is going to be a third component that I think will help push the units of the relevant elements into the demand side.
Yeah, definitely. It's super interesting. Exactly. Like with the difference between tailors and a mine is price. Tailors become a mine at the right price, right? So all of this is about like kind of what level do you need to incentivize. And the recycling, I think it's really interesting to make the parallel with palladium. When palladium was really scarce and went from 400 to 2,000, everybody that was modeling that in detail saw the recycling like rates just going up and up and up and up so quickly. And you're like, okay, there's palladium there that we didn't even accounted for coming back into the system through this recycling. And this is what happens, I think, which is quite interesting.
Yep, catalytic converter theft as well, which is certainly on the rise in London and South Africa. There were some questions. The gentleman at the front, yep, all clear. Anyone else wanted to ask anything? We've got a couple of minutes. No? All right. Where are the interesting companies at the moment? That's what I want to put to the group. Where are the interesting battery metals companies within this supply chain thematic that we've sort of discussed? Aline, are you now looking at North American companies that are sort of close to some of the midstream processing that's coming online?
Yeah.
How's it changing in terms of the companies you're assessing?
Yeah, so for us, I think really when you look across these markets, and Rebecca can talk more about it on the models, but what you see is that it is a rise tide that will lift all boats, right? It's interesting for nickel, it's interesting for copper. All of these metals will be necessary in different portions of the supply chain. I think where is most interesting when we look at Pala is what is near term, because we need these materials sooner rather than later. Who's ready to come to production as easily and as quicker as possible? How complicated is the project on itself, the technical risk related. And the third, something that also Rebecca mentioned, and that I take it very, very seriously because I'm also a carbon trader. What is the carbon input of the project? I think it is going to be as short as 2 to 3 years for us to be pricing carbon into these technologies and into these metals. And that will be a big range of difference. So this is going to be the big differentiating factor of these commodities. Just to give an example, nickel can be added 2,000 of cost to 4,000, depending on how it's produced. Dirty nickel will be 4,000 cheaper than clean nickel. So if you can find clean nickel produced, in the west portion, you can just think about it. Makes sense to be at 20,000. Your commodity is going to sell for 25. That is already happening in aluminum. Already seeing some premiums in aluminum. Aluminum is super tight. So at the moment, everything's going to be sealed, but there is already traders' preference for clean aluminum. And when you get into the carbon tax that you're going to get for that, that's quite interesting. So summary is new production, simple facilities to ramp up, and clean.
I'm afraid it's great, but we've got to stop here because we're 5 minutes over. We've got the presenters who are linked to the meetings. It's a shame. I'll have to put this on for an hour discussion next time out. Fault of our program there, but we've got so much to get through. But look, round of applause for our panel. Thank you very much.